Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from the audience at SmithWeekly, including Cindy W., Todd A., at TBirdV, and Matt S. On the program today is a returning guest, Mr. Jordan Trimble has joined us. Jordan is the president and CEO of Skyharbour Resources, a uranium exploration and prospect generator company that is focused on Canada's Athabasca Basin uranium district. Skyharbour Resources is listed on the Toronto Venture Exchange under the symbol SYH, as well as on the US OTC markets under the symbol SYHBF. Jordan, welcome back to the program. How are you?
I'm doing excellent. It's good to be back. It's been a little while, and we certainly have a lot to catch up on.
We do, Jordan. And I think the best thing to do here to kick everything off for the audience is why don't you take it away here and just cover off a general update on the company, just looking back for 2023, and then talk about company specific plans going into, say, the first half of 2024. And let's just keep it specific to the company just to alleviate our audience of any broad industry information, which of course we may touch on here, but let's keep it specific to the company.
Sure, happy to do that. So just as a recap of the company for the audience out there that isn't familiar with Skyharbour Resources, we're a high-grade uranium exploration and early-stage development company with one of the largest land positions in the Athabasca Basin. It's the highest grade depository of uranium in the world in northern Saskatchewan, consistently ranked in the top 4 mining districts globally by the Fraser Institute. I'm sure most people are familiar with the basin, but I think it's important to emphasize how good a mining district and jurisdiction it is, certainly relative to other parts of the world. So we've been around for 10 years. We've built the company up from scratch a decade ago. We've acquired 24 properties, which is a very significant and dominant land position covering over 1.2 million acres. That puts us as the third largest mineral tenure holder in northern Saskatchewan in the Athabasca Basin. The projects range from earlier stage, more grassroots exploration properties right through to more advanced stage exploration assets that either host small deposits, uranium deposits, and or high-grade multi-percent uranium or U3O8 in historic or previous drilling that we've carried out. So the two main assets that we're focused on, and really the main source of news flow for Skyharbour over the last, call it, few years and going into 2024, are our co-flagship Russell and Moore Lake projects. So both of these assets are advanced stage exploration properties. Russell is a project that we've been very active with over the last 12 months. We acquired this project, as you probably recall, from Rio Tinto. We have an option agreement to earn up to 100% of the project. We're nearing completion of the initial 51% earn-in, which will be done with this upcoming drill program and the money that we'll be spending there this winter. The first program, a drill program that we carried out, which commenced earlier this year, and carried right through into the summer months. We just announced results a few weeks back on this program. It was a multi-phase 9,600 meter inaugural drill program. We tested several targets, including a primary target called the Grayling Zone. It's a group of conductors in the central part of the project. Right beside, there's a road, the road that actually services the McArthur River mine, power lines, and a camp. And it's this group of targets and this target area is right off the road, right near our camp. So very inexpensive and easy to drill. We announced some of the better drill results from that target area in this program. One of the holes intersected 6 meters of 0.15% and 1 meter of just under 0.4%. So we're still looking for a major high-grade multi-percent discovery. I think we'll be able to deliver on that in upcoming drill programs, but nonetheless, we are finding and discovering zones of uranium mineralization. We know that conductive corridor is uraniferous. It's host to all the right indicators and all the right geological features that you need to see to have high grade, meaningful deposition of uranium. So that's the Grayling target. We are going to continue drill testing that in the new year. We're planning to commence a follow-up 5,000 meter program in January. We're going right back in there. We have a number of key targets that we're going to go and drill test early in that program. We also did a little bit of drilling at another target area called the Fox Lake Trail target. And this group of conductors on the northern end of the project are the continuation of conductors from Denison's Wheeler River project. If you look on a map, the Russell Lake project encircles Denison's flagship Wheeler River project close to the Phoenix and Griffin deposits. It encircles the Wheeler River project to the north, to the east, and to the south. And as you're well aware, Denison has been one of our largest corporate strategic shareholders for some time now. They own over 11 million shares of Skyharbour. Their president and CEO, Dave Cates, is on our board. So a very important strategic partner of ours. And these targets that we're drill testing at the Russell Lake project are just a few kilometers from the development project at Wheeler River, which again is host to the Phoenix deposit. So very exciting new co-flagship project. Very pleased with the inaugural drill program that we carried out. We got a good lay of the land. We were able to drill at relatively low cost because, again, you've got this road, you've got power, you've got an exploration camp that we've inherited from Rio Tinto as a part of that transaction. That's a big asset for us. It brings our drill costs down, not just at Russell Lake, but it'll also bring our drill costs down at the adjacent Moore Lake project, or other co-flagship asset, which I'll talk a little bit about. So it's a very strategic asset in our portfolio. It represents most of the acreage between the McArthur River Mine project, largest, richest producing uranium mine in the world, just to the north, the Key Lake Mill, one of only 2 operating mills in the region, just to the south. Again, the road that connects the mine with the mill runs right up through our claims, our western claims at Russell Lake. And collectively, Russell and Moore, they're adjacent to each other, represent over 107,000 hectares of prime real estate in the southeastern quadrant of the Athabasca Basin. So on that main high-grade mine trend that runs up southwest to northeast through the eastern part of the Athabasca. Now, at our Moore Lake project, we were less active this year at Moore Lake as most of the budget for 2023 drilling budget was allocated to Russell Lake. However, in 2024, we are planning a drill program likely between 2,500 meters to 3,000 meters. That'll kick off after we complete the winter program at Russell Lake. It's easy for us to simply skid the rig over from the Russell Lake project to various targets at Moore Lake, including the main target area, which is the Maverick corridor. It's a 5-kilometer long, high-grade conductive corridor host to the main Maverick and Maverick East zones, which host high-grade uranium mineralization. One of the better results at this project was a drill hole we drilled back in 2017 that intersected 21% U3O8 over 1.5 meters. That was within 6% over 6 meters. And we also made a new discovery when we initially started drilling this project in 2017, having optioned it in 2016. We made a new discovery early on in our drilling at what's called the Maverick East zone. And the drill discovery there, the drill hole included a zone of about 1.5 meters of 9% U3O8. Now, what we've done more recently at the Moore Lake project in 2021 and a little bit in 2022 was we went and drilled a little bit deeper underneath the unconformity into the underlying basement rock. So most of the historical drilling and the drilling that we've carried out at the Maverick corridor, in particular at those 2 main high-grade lenses, has very much just been focused on sandstone or unconformity hosted targets. It's relatively shallow. The unconformity lies at about 260 to 280 meters, which is important, but not a lot of historical drilling was carried out to test the underlying basement rocks below the unconformity. So we started doing that just a few years ago and announced just a couple of years ago the best, highest grade basement hosted zone of uranium mineralization, which included a 2 meter intercept of 6.8% U3O8. That was at the Maverick East zone. So in 2024, with this winter program that we're planning at Moore Lake after we complete the drilling at Russell Lake, so it'll likely take place in March and April, we're planning to go right back into several of those high grade zones along that Maverick corridor. We're going to do some more infill and definition drilling, and then we're going to test a number of other regional targets at the Moore Lake project, including the Grid 19 target, which was a new regional target we discovered several years ago. And we're going to continue drill testing along that 5 kilometer corridor, conductive corridor, as only about 3 of the 5 kilometers have been systematically drill tested. And as I mentioned, very little drilling deeper into the underlying basement rock. So between Russell and Moore Lake in, call it the first half of the year, we can expect 7,000 to 8,000 meters of drilling combined between the two projects. We're also working on a mineral resource estimate at Moore Lake. So keep an eye out for that in the new year as well. And one last note at Moore Lake is the potential for one of two mining methods being proposed in the Athabasca Basin, ISR being one, which is what Denison's proposing to use to mine the Phoenix deposit, just a few kilometers from our Russell Lake project. And then the other mining method is Sabre, which is a part of a joint venture between Orano and Denison Mines, two strategic partners of Skyharbour's, whereby they are mining high-grade uranium from surface using borehole technology and drilling technique, where they basically jet bore the high-grade uranium into a high-grade uranium water mixture and pump that up to surface and ship it to the mill. What's interesting about these two surface mining methods is given what we have at Moore Lake, and again, we're working on a resource estimate there, we're looking much more closely at the potential for one of these two mining methods to be used to potentially extract the high-grade ore at the Maverick, various Maverick lenses. So that's something to keep an eye on. We don't have any official studies on this yet. It's all been internal work, but it's something we are looking more closely at here as we enter into 2024. So exciting year ahead of us with the two main projects at Russell and Moore Lake. Again, both of which are large advanced stage exploration properties, relatively low cost drilling, sub $300 all in Canadian a meter, which is significantly lower than most other uranium exploration companies, given that we have access to infrastructure and a camp and fully funded for that. And it should generate plenty of news flow over the coming months as we work our way through the first few quarters of 2024. So that's the two main projects in the company. But as I mentioned, we do have 24 properties. The other 22 projects we consider to be a part of our prospect generator business. And this is a unique hybrid model that we've really run with here in the recent years. So we're obviously focused on making new high grade discoveries and expanding resources at our main projects that we're actively advancing at Russell and Moore. But we also have, and we've been very aggressive in building this part of the business up over the last handful of years, is this prospect generator sub business that allows us to bring in partner companies to advance our secondary and tertiary projects. And if you look at the last 5 to 6 years for the company, we've announced 8 different option partnerships, option agreements, 2 of which have gone through to completion. They're now formal joint ventures, one with Orano, France's largest uranium mining and nuclear fuel company. They are a 51% owner in the Preston project. We retain a minority interest there. And then the other JV partner is Azincourt. And Azincourt has completed their earn-in. They're the majority interest holder at the East Preston project. We retain a minority interest in that project. And then the other 6 partners are optioning into various other projects that we have in our portfolio. And these companies are still all actively earning in. So they have to fund all of the exploration expenditures over a certain period of time. It's usually between 3 to 5 years. And each year they're required to make cash and share payments to Skyharbour to complete this earn-in. At the end of the day, we typically will wind up with a minority interest in the project. The partner company, the JV partner company, would be the operator at that point, and typically they are the operator through the earn-in as well. But we retain a minority interest. We try to keep an large equity position in the company, and on some of those projects, we'll even create an NSR as well. So we do keep some of that upside exposure. If one of these companies has the success that they're hoping to have, they make a new meaningful large discovery, we benefit, our shareholders benefit with the minority interest in the project, equity position in the company, and potentially an NSR on the property as well. So if you look at the various partner companies, the 2 JVs, the 6 option partners, we're expecting 5, maybe even 6 of them will be either drilling or carrying out exploration and field programs in the new year. So happy to go through that in more detail, but collectively these 8 partner companies and 8 option agreements total to over 85 million in combined project funding or exploration expenditures coming in from the partner companies, cash and share payments as well coming into Skyharbour, assuming that these companies all complete their earn-ins. They are option agreements, so it is at their election whether they do complete the full earn-ins, but that is the potential if they do. And needless to say, it's around just below our current market cap, so a significant amount of capital and project funding that could come in. But even if we receive a fraction of that, it's still a meaningful amount and likely very accretive given the model where we're focused on our main projects. There is the potential for new high-grade discoveries and value creation at Russell and Moore that we're actively funding, coupled with these relatively inexpensive call options, if you will, whereby we've packaged these projects up. We've done a deal to bring in a partner company, and they're now paying us cash in stock, funding the exploration at these assets. So really what we're trying to do at Skyharbour, just to summarize all of what I've just gone through, is provide a one-stop shop for high-grade Athabasca Basin uranium exploration and new discovery across a number of projects, not just 1 or 2, but a handful of projects without having to go and raise a lot of money and dilute significantly. We have partner companies funding for the lion's share of the combined total exploration expenditures across these various projects. So it's a unique model to Skyharbour, and it's certainly a model that, given the size of the property package that we have, it really does help us maintain all of these properties. You have to spend money each year in the ground and apply assessment credits to keep the claims in good standing. So it also helps to maintain this large property package and portfolio that we've built up. So for investors looking to get exposure to a number of projects, a number of programs and various operators, multiple irons in the fire, as we like to say, we're one of a few companies that offers that.
George, appreciate you going through all that. One thing that just came to mind just at the end there, 2 things. First, what do you have for basically the average of the life of these partnership agreements, JVs, in terms of the value that you stated? What's the average life left on these contracts? I know that's a rough number, but give the audience a bit of a flavor on how that's spread out.
Yeah, so we have a good slide in our presentation, slide 24, that breaks down each of these, right? And as I mentioned, of those 8 partners, 2 of them have completed their earn-ins, Orano and Azincourt. In the case of Orano, they spent just under 5 million in exploration and a small cash payment to complete that 51% earn-in. Azincourt spent 2.5 million in exploration and a cash payment and a share issuance, which again has been completed. Most of the 80 plus million in combined exploration cash and share payments is yet to come in. We've had a little bit come in from Valor Resources, Basin, Madero, Tisdale, North Shore, but a number of these earn-in options, including the biggest one, which is the Tisdale Clean Energy Option Agreement at our South Falcon East project. That's a $22 million option agreement and transaction that we inked earlier this year. It's a 5-year earn-in. Most of these, the exploration funding from the partners and the cash and share payments have yet to come in. And again, I want to caution everyone that, these are option agreements. So, they'll likely come to fruition provided we have a good market. The better the uranium market is, the more likely we see these option agreements fulfilled. Most of us would be in agreement that we're, still very much in the early innings of, I think, what could be a long sustained bull market. But yeah, we still have quite a bit of the value in this prospect generator business. We still have a lot of that value to come to be crystallized. And I think that comment on the market is important to note, that we probably aren't getting full value for this part of the business in the market, but that can change as these partner companies complete their earnings over the coming years and generate lots of news flow and catalysts. I mean, that's the other big benefit of the prospect generator business, is just the sheer amount of news flow generation from these various programs. I mean, if you look at next year, for example, a number of the partner companies are still finalizing budgets and various other details in the planned programs, but we are expecting a 2,000 meter drill program from Tisdale at our South Falcon East project. We are expecting a probably similar size program by North Shore Uranium at our South Falcon project. We have Madero at our Urchison project and Basin Uranium at the Man Lake project that have to spend money next year, whether that be in drilling or in exploration and field programs. And we're also expecting Orano, for the first time in several years, to carry out a program at the Preston project. We'll participate as a JV partner there. And we are also expecting a program from Azincourt at East Preston. They've done a fantastic job advancing that project. They're, I think, on the cusp of a new discovery there. So a handful of these partner companies are expected to be working in the new year. And again, that'll benefit us and our shareholders with plenty of news flow and the potential to have some exposure to a new discovery at one or maybe several of these projects.
Jordan, with that, just staying on the model here for a moment, and I think you alluded to it a little bit here, but what do you think is maybe a reason or two, maybe a con, or a negative, I suppose, on this model, in terms of it's not getting much respect these early innings of this cycle, which I do agree with you on, but we do think that it would probably have respect as these programs get completed and as investors are attracted to this market, specifically as the food chain comes down into the explorcos of the world. What do you think is right now the reason for the market not fully appreciating that prospect generator business model?
I think it's challenging for the market, and this is not unusual, right? If you look at prospect generator businesses, this is pretty typical, where they're not typically getting full value or a perceived full value for the business that they built and the various partnerships that they forged. Again, as the partnerships mature, advance, as money is spent in the field, as more cash and shares come in, I think that changes, right? But I don't think, at least we're not seeing it, I don't believe, the market kind of paying up for the future prospect of that happening. So as as it comes to fruition, right, I think you'll see that change. But most importantly for us, and I think most shareholders understand this, is the potential to have exposure to a new discovery, a new large high grade discovery at one of these projects. That's the real appealing part of the model. So it's difficult for, I think, the market to value that or price that in currently. But when it happens, if and when it happens, you will see a rapid move higher in the valuation, and at little to no cost to us, right? I mean, that's the key thing here is, it's the partner company that has to fund the exploration. They're paying the cash in shares. Their share price would increase in value quite a bit. We would obviously benefit as a shareholder from that. So I think it's one of these models that pays dividends over time, but is it's not easy for the market to fairly value it upfront.
And there's not a lot of that going on in the market. I mean, there is a couple other companies, I suppose, that are doing a little bit of this as well. I think you're right. When you have a notable discovery that is meaningful to the market, that there should be some pretty good attraction here on valuation. So I appreciate you talking about that. Before we talk a little bit more about the core projects and get a little bit more detail there, Jordan, let's talk just a little bit on capital structure. Cover off for us where we are on shares outstanding at this point, the cash on hand, and then also just major shareholders, including yourself. And then, of course, if you see the need to finance over, say, between now and end of Q1 2024.
So we have 170.4 million shares issued and outstanding. It's trading around 90 to 95 million dollar Canadian market cap. We're well funded right now. We've got just under 4 million in the treasury. However, we are, as I mentioned previously, with the prospect generator business, expecting several million dollars in cash and stock to be coming in over the coming months. And over the next 2 years, we could receive upwards of 10 million in cash and stock. And this has allowed us to keep the equity dilution in check. In fact, we haven't raised a hard dollar in a private placement or a financing since August of 2020. I suspect it would be very difficult to find many other junior companies that can say that. We have from time to time raised flow through to fund the exploration almost exclusively at our two main projects, Russell and Moore. And a note on that, there's a lot of interest in flow through in these companies, not just Skyharbour, but in other Athabasca Basin and Canadian uranium companies. New money's coming into the sector. And the great thing with the flow through, the charity flow through now with the critical metal tax credit, is you're seeing a lot of these deals priced, the financing's priced at 40, 50+% premiums to market. So there's less dilution there. The money has to be spent in the field, so it can't go towards G&A. And we've seen a number of peers that have taken advantage of that. So it's important to note that as you're advancing these projects, these companies do have access to this financing mechanism that is very attractive, given you can raise money at a significant premium to the current share price. So yeah, we're funded though, as I mentioned, for the upcoming programs at Russell and Moore Lake. The partner companies at the other projects have to fund the exploration and drilling at those properties. So it's incumbent on them to raise the money to do that. And like I said, we are expecting some cash flow to come in from various partner companies over the next several months, which we'll put towards probably additional staking, help pay for the G&A, help also pay for some of the exploration that we're planning to carry out at Russell and Moore. And just a quick note as well on some of the larger and strategic shareholders, management and insiders. We own about 5%, and you can see over the last couple of years we've been actively purchasing shares in the open market. I've bought quite a bit of stock in the open market over the last couple of years. I still see there being an incredible value proposition specifically with Skyharbour as we enter into the kind of later stages of this bull market. I think it's important to emphasize that typically junior mining companies outperform in the later innings, in the later parts of bull market. So we've seen a pretty significant underperformance of especially the micro cap and small cap companies. We're one of the larger junior companies, so we've just kind of started to catch up, if you will, with developers and producers. But you can still see this lag with the micro and small cap junior companies, and that's telling. That just shows you we're still, I believe, very much in the early parts of this bull market. So management and insiders, we've got a lot of skin in the game. We're believing in what we're doing, and you can see with our insider reports. I'm the largest shareholder in that group. Right behind me is Dave Cates, and Dave's added to his position here over the last several years as well. And then in addition to management and insiders, we've seen a growing institutional, corporate, and family office shareholder base. So I'd say roughly 55 to 60% of the shares outstanding would include management insiders, institutions, family offices, and corporates. The two largest corporate shareholders I mentioned earlier, Denison is our largest strategic shareholder and has been since 2016. Just recently, we brought in Rio Tinto as a large strategic shareholder as a part of the Russell Lake option agreement. That now their shareholding and position could potentially grow as we earn in more at Russell Lake. And then there's a number of notable institutional investors, most of the uranium-centric funds that most that follow the space are familiar with, are shareholders of Skyharbour. We are in all of the major uranium mining ETFs, including both of the Sprott ETFs as well as the URA. And we have a number of family offices kind of scattered throughout the world that have built positions, not just in financings, but also in the open market. And again, I'll emphasize this point that we're seeing new money come into this space, which is, I think, one of the more encouraging developments from the equity standpoint, to not have just recycled money in the mining space or in the resource space, but to have new capital flowing in from institutional investors, family offices, and retail people that have never bought, mining stocks, have never owned any uranium companies or had any real exposure to nuclear. This new money is starting to flow in, and I think I really think it's just the tip of the iceberg. I think we're going to see much more of that in the coming months and into 2024.
Agreed. Absolutely. People turning their eyes down the food chain, as we've prior discussed about looking at the Explorco space and how that's going to be important as the cycle progresses. Jordan, I want to come back to some other broader Athabasca Basin stuff and get your thoughts on a few other things, and then also talk about projects that are available in the portfolio that you guys have for partners. But before we get into that area, just talk more about these co-flagship or core projects. Now you have both Moore Lake and then also this Russell Lake Rio Tinto. Talk about that, because you have some recent news on Russell Lake, and then just talk in more detail about plans at Russell, what the priority is really there, and then where Moore Lake falls in as far as what work you plan to do, say, in 2024.
Yeah, so just to recap, so Russell Lake, again, a newly optioned project from Rio Tinto. It was hotly contested. I know there were a number of other companies looking to do a deal, and we were fortunate enough to get that option agreement signed with Rio. We then, and that was in the summer of last year. We then spent a few months working with Condor Consulting to refine drill targets. We got the permit. We got an exploration agreement signed with the English River First Nation, which was a major development for us and milestone. And then we were able to commence the inaugural program earlier this year. And basically drilled in several phases right through, as I mentioned, into the summer, with news out more recently on the final results. And as I said, as I said earlier, very pleased with what we found. We're finding widespread uranium mineralization across various target areas. The Grayling target, as I highlighted earlier, the primary target that we drill tested, an area that we drill tested, we expanded the strike length of mineralization. It's fairly widely spaced drill fences at this target, so we find discontinuous zones of mineralization, but you'd have to go and drill to prove continuity. But we're finding widespread mineralization across what is now well over a kilometer of strike length. And again, it really hasn't been systematically drill tested to go in and vector in on what could be, a new high grade discovery and deposit. That's one of the key things we're going to be focused on in the upcoming drill program, as well as testing some other targets in and around that target area. And a lot of these conductors, a lot of these corridors are just a continuation of fertile uraniferous corridors on Denison's adjacent Wheeler River project. So there's a lot of overlap there. And again, Denison being a large strategic shareholder of ours, it I think bodes well for our planning and the potential to go in there and make a meaningful new high grade discovery. So we'll start this 5,000 meter winter program, as I mentioned, in January. We're ready to go, anxious to get back to the project, and like I said earlier, also confident that we can deliver on a new discovery at Moore Lake adjacent. Again, just to recap, the project is 100% owned. It's the most advanced stage of our assets. It's had the most work done on it. There is small high grade deposit there, and we are working on a resource estimate. But in the near term, in the next few months, as I mentioned, we are planning an additional few thousand meters of drilling tied in with the drilling at Russell Lake. We can move the drill rig back and forth relatively easily. We are going to be going back in and doing some definition and infill drilling in some of those higher grade zones at the Maverick Corridor, as well as testing some of the regional targets. So that's going to be the focus for us. That'll provide plenty of news flow, and we're expecting results from both Russell and Moore Lake, in the coming months and going into the summer months. And it'll be, again, it'll be a great, the prospect generator business will be a great complement to us going in and carrying out these drill programs at the two main projects.
On just overall covering financing going forward, and obviously, substantial discovery is going to essentially take care of itself with respect to financing and conventional methods of financing. But as you guys advance these through, and of course, as you know, you don't always hit on the first couple of drill programs or even first couple of holes. Sometimes you do, but for the most part, no. What is your thought on royalties and maybe the intention to sell royalties if market conditions are right, and of course the deal terms of the royalty are correct? How do you look at that as a potential non-dilutive way to help finance exploration work on core projects, or maybe even other projects that you haven't already vended out to partners? Just talk about royalties and maybe how that might fit into how you guys approach this.
Yeah, no, look, it's a great question. And, as the uranium market marches higher, royalties, needless to say, become much more valuable. We've created several royalties on a handful of our projects that we've optioned or JV'd out. So we typically just structure a standard 2% NSR with providing the partner with a buyback option of 1% for 1 million. Depends on the project, but yes, that is something we are looking at more closely now that we have the ability to do that, because we do have, of those 24 projects, 2 of which, Russell and Moore, were focused on. The other 22, part of our prospect generator business, we've optioned and JV'd out 9 of those 22. So we've got, call it, a dozen or so other projects that we own 100% of that don't have existing royalties on them, that we can option or JV out. One in particular that we're in negotiations on right now for a potential new option partner to come in on is the South Dufferin project, which is a project that we acquired from Denison earlier this year. We have 100% of it It's in the south central part of the Athabasca Basin. It's drill ready. There's uranium mineralization in historic drilling. It's on trend with a big high grade deposit owned by Cameco called the Centennial Deposit. You've got NextGen in the area, you've got Orano in the area, you've got Cameco with the Centennial Deposit, so it's got the right address, and it could very well be a company maker for a new partner company coming in to option it. So that's one project that we're looking to option or JV out. And getting back to the royalties, yeah, look, we can create royalties on these projects, part and parcel with these option agreements that directly bring in cash and stock and ensure there's funding at the project. You can slap on a royalty as well to help retain as much upside in the event that you do have, or the partner has a major discovery and succeeds in finding something. So yeah, it's something we are looking more closely at, kind of in conjunction with our prospect generator business. This part of the business too, I'll say, is as the uranium market heats up, it becomes much more scalable. There's a lot more interest, companies looking to enter the basin, build land positions, or companies that are already there that have projects looking to expand their existing portfolios. We're one of just a few companies that they would go to look to deal on with mineral claims and properties in the region.
Appreciate you covering that off, because that's always something that's going to come into the conversation. And of course, we're going to see probably heightened competition in the royalty space here as well. And obviously, the incumbents also are looking for deals, as you well know. I wanted to just get your thoughts on, how you see the company going forward here as you guys develop out the various projects and partners come along, and the various activities you're doing on both prospector generator model and then conventional exploration. But then also, as I think you and I probably have discussed in the past, Jordan, the Athabasca Basin is probably one of the most densest pieces of land that have not only credible uranium deposits, but also a significant amount of interest in juniors, all tightly packed into this area. Just talk about maybe M&A and how M&A might fit into your overall strategy. And maybe there is something out there that makes sense where you guys can continue to build land package and build strategic options, I suppose, through M&A activities, because we're obviously seeing that pick up. And of course, we've seen some transactions recently, which I'll get into in a moment. But just talk about how M&A specifically fits for Skyharbour and if that remains to be on the books for the company.
Yeah, I mean, look, I can only say so much on this topic, but we are very much looking at all opportunities that would um, provide for an accretive development or situation for shareholders. M&A obviously is one avenue for that, and we are in various talks, and I would say I'd agree that next year in particular, I think you'll see continued M&A activity, especially in the Athabasca Basin. We've seen some pretty significant consolidation and deal flow in the last year and a half, and that as one of the larger junior companies in the Athabasca Basin with a large land package, diversified asset base, ranging from, again, earlier stage exploration properties right through to advanced stage exploration assets. We have pounds in the ground. We've got a team that's been operating and looking for uranium in the basin for many decades, focused uranium exploration expertise in the basin. We I think, have a very attractive target for a potential suitor down the road, and so yeah, I mean, look, we're very much open for business in that regard, and I think we saw just recently the transaction announced with Latitude 92, and I think you'll see more of that kind of consolidation. It's interesting too, if you look at the valuation and the companies in the Athabasca, because even though, yes, it's you can say it's crowded. If you look at a claims map, it's certainly gotten more crowded. Nowhere near where it was in 06, 07, but it's you're seeing it fill out with new claims and new properties. But there aren't that many companies that are a $50+ million valuation, right up to $500 million, right up to the developers, right? So you had last year, as you recall, UEX was acquired by UEC. That was call it around a $300 million transaction. Just earlier this year, you had ISO Energy and Consolidated announce a transaction amalgamating those two companies. So, ISO Energy was $300 to $500 million market cap over the last couple of years, and then just recently, with in the last week or so here, with Atha, Latitude, and 92. Now, Latitude, their project base is outside of the Athabasca Basin, but Atha and 92, their assets are in the basin. So, assuming the transaction completes, if you look at the landscape thereafter in the Athabasca, there's only a couple companies that are in that valuation range. Call it 60-70 million to $500 million. It's us, Skyharbour, F3, and then you've got various other companies that are in that, call it 30 to 60-70 million dollar market cap range. You've got the developers that are above $500 million. So it's interesting when you see that. Yes, there's more companies now operating in the basin, but you don't really have a whole lot of companies that are in that valuation range that could be an attractive valuation for a potential acquiring company.
It's good stuff there, and definitely you have M&A heating up here, and this one with Atha Energy, Labrador. Altitude. Hold on a sec. Latitude,
Latitude.
sorry, and
They
also
have names.
92. And also 92 Energy. That one was definitely interesting here, and I think we'll continue to see this as we go here and we progress the cycle here. So I think that was pretty much it, Jordan, just as far as overall Skyharbour update. But was there anything else that you wanted to add for the audience before we take off here, just as far as other things you want to mention?
Look, I think we did a nice deep dive on the company, and I'm always available if anyone wants to reach out and talk anything specific about Skyharbour. I just finish up by saying we're embarking on what will be our most active year for drilling at our main projects, Russell and Moore, advancing these projects as well as partner funded programs at various other properties. We are expecting to have other new option and JV partners in the coming year. So look for us to continue building up the prospect generator business. We have from time to time announced new project acquisitions, whether through staking or property deals with other companies. We remain active there. It's relatively inexpensive to stake, albeit a lot of the low-lying fruit's been plucked. So there's reopenings from time to time, and our team's done a good job of getting in there as quickly as they can to acquire new claims at relatively low cost. So keep an eye out for that. And yeah, look, I can't comment a lot on potential M&A as it would pertain to Skyharbour, but I can say, as I said, we're looking at all options, and I think there will be in the new year, as we're seeing currently, continued M&A and deal flow happening in the Athabasca Basin. It's as really the best uranium mining development and exploration district in the world. There aren't that many public companies that are active in Kazakhstan, as we know, right? So it's Canada, the U.S., Australia, parts of Africa, but Africa has had some. Well, Niger has had some issues recently with the coup. So you really kind of this highly concentrated production profile globally. I think it's important to remember that 80% of global uranium mine supply comes from just a handful of jurisdictions globally. And some of those are not investable. You're not, money, public capital is not flowing into those jurisdictions. It's government run. And so, yeah, you basically kind of narrow in on the Athabasca Basin pretty quickly as far as, investors are concerned. And I think that's, it's a good segue into what we are seeing from a macro standpoint. I mean, I know you've had guests on previously that have done a good job providing commentary on the market, on the nuclear industry and the uranium mining industry as well. But I think it's important to emphasize the Athabasca Basin and its role going forward to provide that long-term secure supply of nuclear fuel of uranium. It's becoming ever more important, as in particular in the last couple of years, where we've seen a number of pretty significant major global developments unfold here. In particular, obviously the Russia-Ukraine war, which it's had a major impact on a number of commodities, but uranium in particular, it's still playing out. We just saw earlier this year, the subcommittee in the U.S. approve the import ban on Russian uranium. We've just got news here recently that it looks like there's going to be an expedited vote for that in Congress. And actually, interestingly, just recently, we've also seen one of the larger nuclear lobby groups and advocacy groups get behind this, which was, I think, unexpected. Most utilities over the last several years have been adamantly opposed to restricting their ability to buy uranium from wherever. So it's interesting to see the industry now getting behind this, and so that's going to have a big impact on the U.S. Nuclear industry. I mean, 25% of the enriched uranium and nuclear fuel last year for consumption in the U.S. came from Russia, right? So where is the U.S. still the largest consumer of uranium globally? Fleet of over 90 reactors. Where are they going to get their uranium going forward? Well, you've got a breadbasket of uranium in northern Saskatchewan just across the border. So I think it's going to, again, play a much more important role satisfying the needs of the Western utilities. Just recently as well, we had the groundbreaking news, although it was reported on previously, but officially announced at COP28, 22 nations basically signing this ambitious declaration to triple nuclear capacity between now and 2050. Most EU member states, as well as Canada, the US, Japan, South Korea. That is a lofty goal, but look, if even a part of it is met, it's a huge amount of new demand coming online, and that's the exciting thing right now, I think, in this sector and with this commodity, is we're now really starting to see a demand narrative and thesis build and grow. This has really kind of been the last 5 or 6 years about the supply side. And supply chain issues and supply uncertainty, geopolitical issues that, as we talked about with Russia, Ukraine, and the coup in Niger, geopolitical issues that have strained the supply side. But we're now seeing the demand side really kind of come into its own, whether it's just simple things like reactor extensions, new licenses being granted. Obviously, the build out in places like China, 150 new nuclear power plants planned there over the next 15 years, more nuclear capacity coming on in China in the next 15 years and has come on globally in the last 35 years. The advent of small modular reactors, they're building the first one here in Canada, the Darlington plant, and most Western nations that have nuclear fleets, have some program to advance and commercialize and facilitate these SMRs coming online. So that could be, we expect that to be a meaningful new source of uranium demand in coming years, and really hasn't been forecast. Like, you don't really see much in the way of forecasts and estimates going forward on how that will impact the market, how much more demand that's going to bring online. But it's just a kind of a confluence of factors right now that's that's really providing these tailwinds to the sector. Nuclear is the only source of baseload emissions-free, reliable, scalable, affordable electricity generation. It's finally being recognized as such, almost around the world. You've got new nations planning to roll out civilian nuclear programs, and then this is all in the backdrop of a supply side that shrunk quite significantly over the last handful of years. We're producing 140 to 145 million pounds of primary mine supply annually. Demand is ranging from 190 to 200 million pounds. It's growing at over 4% a year right now. That's up quite a bit from just a few years ago, even. And there's this major structural supply deficit that's formed over the recent years. Now, most of that was met with secondary supplies and inventories, underfeeding, various other sources of material that basically plug that gap. But that is no longer the case, and hence the reason, as you and I were talking about previously offline, hence the reason you've seen the market tighten up as much as it has. I mean, basically all stages of the fuel cycle, from the spot U3O8 market right up through conversion into enrichment, these markets have basically seized up. I mean, the conversion and enrichment markets in particular are hitting all-time highs. They're incredibly stressed. They're being squeezed higher. That is a good leading indicator for higher U3O8 prices. And I mean, we're already starting to see that, but I don't think it's quite been squeezed as much as it will be yet. We've seen just in the month of November, the price was up almost the U3O8 spot price was up almost 9% on the lowest monthly trading volume in 18 months. I mean, what does that show you? That's showing how tight the market is. When it broke through $80 a pound, I think a lot of people are expecting there would be this onslaught of material that came into the market. And we just really haven't seen it. And it's also important to note, the financial entities like Sprott, like Yellowcake, yes, they've been buying more recently, but they are not the reason the price is at $80+ a pound, right? We saw in previous years, in particular in 2021 and 2022, they were a pretty big part of the price spikes that we saw, but that is no longer the case. They're just adding to that incremental and secondary demand. And so, again, confluence of factors both on the demand and the supply side that I think will continue to put upward pressure on the price. I get asked a lot, where are we at in the cycle, timing wise? How does it compare to previous cycles? And it's always a fun exercise to go through, but I'd venture to say, as I've said before, we're still in the early days. If you look at where we were in 06, 07, you had uranium spike up to $135, $137 a pound in the spot market from, $60, $70 a pound. Obviously, a big part of that kind of blow off top at the end was the flooding at Cigar Lake. And then you had the price settle back in, prior to the financial crisis. And then, after that, it jumped right back up to $70, $75 a pound. And then Fukushima happened. But if we look at 06, 07, a couple of key differentiating features. One, $137 a pound. Well, that's close to $200 a pound today in inflation adjusted terms. So much, much higher price then, both in nominal and real terms. You also had a huge amount of new production coming online. I don't think this can be overstated. You had Kazakhstan ramping up from 0 pounds a year to what they thought initially would be 20, maybe 25 million pounds, but actually on their way to 50 million pounds. So you had over 40% of global primary mine supply, which now is in Kazakhstan, coming out of Kazakhstan. That was ramping up in that decade, right? You had other new production coming online. You had the megatons to megawatts program with Russia and the USA, and you had a cumulative supply surplus, well over 200 million pounds in the middle of that decade, compared to today, where the cumulative deficit between now and 2030 is north of 450 million pounds. So the market was fundamentally different in '06, '07 than it is today, but in a bearish for a bearish case, not a bullish case. So, when we look at these two time periods today versus, '06, '07, who knows? Does it do what it did in '06, '07? It's tough to say, but I think there's a very strong case to be made that we'll see a continued rise in the price. It's a sustained bull market. You're going to see the new norm, the new equilibrium uranium price, especially given cost inflation at development and mining projects over the last several years. That new price is going to be significantly higher than where it has been over the last decade or so. And then if you look at it from an equity standpoint, an investor standpoint, and we'll just use the basin as an example, these companies were valued much higher valuations in '06, '07 than they are today. You had hundreds of publicly listed uranium explorcos, developers back in '06, '07, in that bubble. Yes, you've had more companies come to market in recent years, but nowhere near where we were in '06, '07. And just bringing it back to Sky Harbor, uh, four of the projects in our portfolio, four of the 24 properties in our project portfolio were in a company, J&R Resources, which was run by our geological team back in the mid 2000s. Well, when the market ran up, the uranium price ran up in the mid 2000s, J&R was trading at a $300 million plus market cap with just primarily those four projects. So we've since reacquired all four of those projects. We've bolted on another 20 projects in addition to those four, and yet we're sub $100 million market cap. So the re-rate potential as the uranium price moves higher, especially with, as I mentioned earlier, smaller cap names that have lagged larger developers and the producers. There's a very robust and compelling re-rate potential and story there as this bull market matures.
Lots and lots of stuff, and you just gave everybody a quick shot of what's happening across the market, and I appreciate that. As you know, you and I have we've been beating people to death on the macro stuff, and we've also heard the macro stuff so many times over the last, oh boy, how long has it been? 7 years in this sector or more at this point for me anyway, or 8 years or whatever it's been. Just a couple points. First of all, congratulations for Canada on trying to advance this SMR work, because we've seen some failures come out of the US, specifically one that had the best lead time as far as NRC approvals in the US. Of course, we've seen that fall on its face, and unfortunately that's sad, and some of the things that have come out of there, it's not a very good example for the rest of the industry. But thankfully we've got some respectable ventures in Canada that are working hard, as well as some other groups internationally that are working, very well respected groups, and I think we'll finally see the SMRs get over the finish line at some point with some deployment by the end of the decade, I would hope. And then just with respect to uranium jurisdictions that are actually proven, I would suppose at the start of this year you might have had 5 decent jurisdictions we could have talked about, but obviously Niger has dropped off a bit recently with respect to jurisdictions. So to me, I really only see 4 jurisdictions that are really investable for the bulk of the capital. There's some fringe jurisdictions, I suppose, that people could take some extra risk on, but sadly, I mean, they haven't even got a framework in place for transport and export of uranium, which is obviously some of the biggest hurdles you'll have. With the price of uranium being at 80 here, I think a lot of people would have expected to some degree that there would be a little bit more action in this market in terms of supply response. Sadly, we really just haven't seen much supply response, other than, of course, by the major incumbents. But we've also seen consistent delays, lags, failures, and possibly some more failures to come here soon, as we start to see the tier of restart companies globally start up, seeing big promises on production profiles and nameplates on these startups. And quite frankly, we're going to see significant problems and some failures coming out of these restarts, because obviously there's a couple out there that have technical issues. There's a couple that have already been hammered pretty well, if you will, or high graded substantially in the last cycle. So we're going to see some issues with some of these restart tier companies. And then we haven't even started to get to the greenfield folks. And so I think even at $80 uranium, the response has been very muted, very lethargic. And, again, we need sustainable prices for all these things to happen. Bank financings underpinned by contracts and all the other parts that come to that piece. And so, as you said, when you started to talk about escalations in price, this is something that we're going to see a very, very substantial supply response at some point. But then also, in the meantime, I think we're going to see a price point that's going to be substantially higher from here. And I would not have said that 3 years ago, but I do see now, because nothing has happened at $80 uranium yet, that we'll see some notable moves yet to come, Jordan. And as you and I both agree, I think we still are on the half of the inning side that is still early. So we'll see how that goes here. Just one more time, just to highlight off Skyharbour as we wrap up here. Appreciate the time. For potential investors who are listening in, the company has a market capitalization of about 94 million Canadian dollars. Why should Skyharbour Resources be considered within the institutional, family office, and retail investors portfolio?
One, we have a very unique hybrid model with focused exploration and discovery potential at our two main projects at Russell and Moore Lake. And these are projects that are advanced stage exploration assets. We're not going in there working through moose pasture. These projects have high grade uranium. They have all the right ingredients for additional high-grade uranium to be discovered. They're the right address, just south of the McArthur River mine, at Russell Lake, adjacent to Wheeler, and just northeast of Key Lake. Most importantly, catalyst-rich upcoming 6 months with those two projects, the drilling that we're carrying out, and other news flow that'll be generated from those properties, coupled with all of the news flow and potential catalysts coming from the partner companies. We've got option agreements that we've signed with 8 different partner companies that total to over potentially upwards of 85 million in combined project consideration. That's exploration funding, cash, and share payments, assuming that these companies complete their earnings. We're working on bringing in new partner companies at some of our other 100% owned projects that we have not yet optioned out. We're in a unique position, and our shareholders are in a unique position, getting exposure to multiple programs without the equity dilution that is required to fund this multitude of programs. We have partners paying for a good chunk of that. So like I said earlier, I'd say, we provide a one-stop shop for high-grade uranium exploration and discovery potential in the Athabasca Basin across a diversified asset base. We have strategic partners in Orano, Denison, and more recently, Rio Tinto. And as a smaller cap uranium advanced exploration co, we offer more torque and leverage to rising uranium prices as we see this market march higher.
Jordan, thank you for that. And one other thing, just best way for folks to reach out to the company.
Yeah, the best way is just to go to our website, skyharbourltd.com. All of our contact info is on there. We have an investor relations manager, Nick, who you can reach out to. I have my contact info on there as well. So if you have any other questions, just feel free to reach out to us directly.
Always good to catch up. Keep up the work there, and I look forward to chatting again soon, and certainly in 2024. Thank you.
Thank you very much, and we'll catch up soon.